Okay, so this webinar will be recorded as well. If you miss any of the session or you want to revisit anything as a revision, yeah, please feel free to go through this recording later, all right? So let's start on technical analysis, all right? Welcome to the dark side, because once you enter this, you are not going to unlock what you are going to learn today, all right? So first, let's give a very brief definition on what is technical analysis. So technical analysis, right, is a very scary term when people see technical, but really what technical analysis is just some indicators, some lines, and some charts to study the price and volume and to understand what is the supply of demand for a security, or I would say a stock or a company. And we will then analyze and see how it changes the price, the volume, the volatility, okay? So technical analysis, very important. It usually gives you indication for short-term signals. What I mean by short-term signals is that if you compare fundamentals and technicals, right? Fundamentals will give you a more long-term perspective on will the company be growing or not. But technical analysis, right, is here to assist you to know, is this a good point of entry? Is this a good point of exit point? When is the next resistance where people will start selling? Okay, so it's a short-term signal for you to enter or exit. So technical analysis, these are the four main technical analysis that is commonly used by most investors or traders, all right? First, we'll look at chart patterns. We see what is the price trend and what are the important price level for each of the securities. Next, we have technical indicators known as oscillator. It's because that, you know, the indicator basically oscillates like sine wave. And with that oscillator, you can tell, is the price movement going up? Is it too high now? Is it worth taking profits, or is it good time for your entry? Also, volume and momentum is also another indicator that technical analysis look at, all right? So a brief comparison, fundamentals versus technical. Fundamentals will tell you what companies or what are worth for you to look deep into to buy, okay? So once you know your fundamentals, you did your research already, right? You have you come up with a watch list, say top 10 company that you think is very good in terms of their fundamentals. They have steady financials. You are willing to take the risk to invest in them, okay? That's when technical analysis come in to tell you when to buy, okay? Very important. Don't rely solely on technical analysis to trade or invest. Always know, always deep dive into homework, and first you know the company, is it steady or not before you do your technical to enter, okay? If not, if you fire based on technical, you have a higher risk. You are exposing yourself to unnecessary risk, okay? So that's why FA, Fundamental Connect with TA, will tell you what is the best time to buy what, okay? So today, technical analysis is a very big topic, to be honest, because everyone will have their preference on what technical analysis to use. But really today, as a beginner, basic, or starter course, right, I would like to bring your attention to these 6 topics, all right? These 6 will be sufficient, more than sufficient for you to kickstart on your entry and exit for your stocks or even option trading. First, most importantly, candlestick, all right? Everyone today needs to know how to use your candles, okay? Don't use line chart, don't use any other chart. Make sure everyone change to candlestick chart, and I will teach you how to do this. Second, we look at support resistance. We look at trend lines, see whether stock is going up, going down. Moving average, very important indicator. RSI indicator, another important indicator that I will teach you basics, how to use, and also what are the importance or useful candlestick patterns that you can observe from a stock chart and know whether is it a potential entry or not. Website of today. Today, I will be relying a lot of my charting on this website, all right? It's called tradingview.com. Take a screenshot or visit this website. You can even have a practice together with me if you have your computer ready. So just type tradingview.com. Let me share my screen. Once you type tradingview.com, right, you should be able to see this on your computer. Oh, hold on a second. Let me share this. So once you go to TradingView, right, this is what you will see. Oops. Yep, this is what you will see in TradingView. You don't need to care about any other stuff. So once you are in TradingView, just click on charts, all right? And it will start to load for a while. And here you go. Here will be your charts. Okay, so what I'm showing here is a candlestick chart of a stock called Apple. Okay, the stock name is here, the stock ticker is here, and this chart here will be candle. If you are not seeing a candle, right, don't worry, just go on the top left here. See this stock ticker, the third box on the left, top left. Just click on it, click candles, all right? Candles or hollow candles, I will prefer to use candles. So I advise you to stick with candles this session, and you can change it later if you want to, all right? Just go with candles, and yeah, just pause it here, and we will come back to our presentation and we'll guide you through how do you draw your technicals, okay? Yep. All right, so this is the website of today. Okay, with that, let's us kickstart our first topic on technical analysis. All right, this is candlestick. So candlestick, right? Very important. There are only 4 important data that you need to take note of from the candles. OCHL, okay? O stands for open, which is the open price of the candle. C, closing price of the candle. H, highest point, the high of the day or the time frame that you define. L is the low, okay? Open price, close price, high price, low price, OCHL. Basically, every candle is right, be it green, be it red. Green means that it's a candle that is a good signal. Red is a candle that means it's a downtrend that day, okay? So no matter which candle you are seeing, right, there is always this 4 information, OCHL. And very importantly, you will see that green candles, right, green means it's good, means the price goes up that day or that second, okay? So open price will be lower than your close price. Make sense? You open lower, you close higher. So it's a good thing, price is going up. So green candles, very importantly, open price is always lower than close price. And on the opposite side, right, if you see a red candle, it means that that day your price go down, okay? So when you open is this price, you close at this price. So open here, close here. That's why it's a red candle, okay? Does it make sense to you? If you understand what I'm saying, type in 1 so I can continue to explain. All right, type in 1 if you understand what I'm saying. If you don't, type in 2 or type in your questions. So page ready. Okay. Anyone unclear? I'll just pause here for say 10 seconds before I move on to the details on candles. No questions? Okay, so let's move on. Candlesticks, all right? OCHL, these are very 4 important data that you can get from a candlestick. And when you look at a candle, right, it's basically a box plot if you know some basic steps. But from this box plot, right, I'm going to tell you how do you read the candle. So you can see here, every candle, right, will have a body. Some don't have a body, but don't worry about that yet. You always see a body with green or red color, and you will have 2 tails. The tails on the top, the tails on the bottom, right? And we call that wick. So the body will give you the information on the open price and the close price. Whereas the tail or the wick, right, it will tell you the high price of that candle and the lowest price of that candle. Color, like I mentioned previously already, greens means it's a bullish candle, means that price is going up. And red color means it's a bearish candle, all right? Bearish means the price is going down. So bull and bear, green for going up, red for going down. So when you are going up, your open price is lower, close price is higher. When you are going down, open price higher, close price lower. Okay? So each candle, right? Every one candle, very, very important. Each candle represents one defined time frame. What do I mean by one defined time frame? So if I open my chart on a daily basis, if I open my chart to define that, oh, I want to look at 1-day chart. By saying that, it means that each candle represents 1 day. So if I open my chart on a 1-hour chart, each candle represents 1 hour. All right. So yeah, this is very important. When you change the time frame, the candle changes as well. All right. We'll look at some example later. So next on for candles, this is a very quick example. This is taken a screenshot from TradingView, which I guide you all through just now. And you can see here, this is a stock Airbnb. This is tickles. And I want you to pay attention at these two black boxes that I highlight. Okay. So D stands for day chart. All right. When I select D, right, as I mentioned, D day chart, 1 candles represents the price movement within 1 day. And when you place your cursor on one of the candles that you want to look at the info, right, you can see that this candle is a green candle. It has a body. So this will be the open price, which I'm pointing here, and the close price is here. So the wick, you can see the wick, the highest point of the wick will be the highest price, and the lowest point of the wick will be the lowest price when it's trading that day. Okay, so how do you know what is exactly the value of OCHL? All right, you can just take a look at this box, which I highlighted here. O is open price, high, low, close, and what are the movement in terms of price and percentage of that day itself. All right, so Airbnb for this example, open price open here is 143. Highest price will be 152, lowest 142, close at 147. All right, so very, very important. When you know how to see the candle, right, you can actually tell how is the tug of war of the price of the buyer or the seller of that day. All right, this is for green candles. Another example would be red candles. So it's a price going down for that day or a defined time frame. This example I'm using is Alphabet Google. So this will be a 1 day candle also. As you can see, I highlighted here, this will be the open price, close price is here. So open price higher than your close price. Okay, and that day for I think this was Thursday itself, Google is down by 0.86%. Okay, so this is a red candle, price moving down, red candle, price moving up, green candle. Okay, so next on candlesticks, right? Different time frame give you different candles, but how do the candles actually show you the data? And this thing I realized just I would say at the start of this year, right? Previously, I was looking at candle for different time frame. I don't know how it works. I only know that, oh, when I look at 1 day, it will show you 1 day of movement. So simply is this, right? Candlesticks, when you look at different time frame, when you build from shorter to bigger time frame, right, is actually an addition, a sum of a candle. When I say sum of a candle, I will give you an example. So if I'm looking at 30 minutes chart, right, 2 candles from the 30-minute chart, when you add them up together, right, if you give you 1 candle in the 1 hour chart. Make sense? So when you have a green candle here, you have a green candle here for 30 minutes. When you change your chart into a 1 hour time frame, right, you will only see 1 green candle. Okay, so there are 3 examples here below, just to guide you through, so you will be easier to digest this piece of information. On the left will be 30 minutes candle. On the right side of each of the boxes will be 1 hour candle. So first example here, we have 2 green candles, a big fat green candle and a small green candle which open and close the price at higher range. Okay, so when you add the 2 30 minutes candle together, right, you get a longer 1 hour candle with a longer body and also a longer tail on the top. All right, so this will be 1 hour candle, and when you break it down, this is the first 30 minutes price movement, this is the second 30 minutes price movement. Second example, similarly, but now we have a red candle, first red candle, second red candle which opens lower, and when you add these 2 candles together, it will be a longer big fat red candle, right? So this is a very, very bad signal telling you that the stock is falling very painfully in that 1 hour of time frame. Okay, so green plus green, very easy. Red plus red, also very easy. But what happens if that I have a green movement, which means sometimes the price is going up and sometimes the price is going down. So someone is buying on the first first time frame and someone is selling on the second time frame. So when this happens, right, it will serve as a cancel off effect. So green candle minus red candle, that kind of thing. So you see here, we have a green fat candle, red candle, the body mostly on the top part, right? So when you add these two together, you can see that the body of the green candle has been cut off, all right? So the body of the green candle has been cut off, and it is really because of the subtraction of, you minus off whatever the seller has been selling, all right? So it will leave you here. So when you look at it, it makes sense. You open here, and supposedly you close here, but sellers is selling. So in the end, this will be your open price, and you close at here for that 1 hour, all right? So this is how you add the candles up, and it's really important for you to know how the candle actually forms, all right? It will help you very much in the future when you are trying to see, oh, this candle, when I see this, what's the rationale behind, all right? When you see this candle, you don't just blindly see, oh, when you see this, you do this. I don't want you to act like that, but I want you to really understand when you see this candle, what does it really tells you, okay? How is the price movement, how the buyers and seller are fighting against each other, and the resulting effect, the resulting scene that we see is basically this candle that represents on the stock chart itself. Okay, make sense? Type in 1 in the group chat if you know what I'm talking about. All right. Type in 1. Type in 1. Okay, fantastic. All right, Mandy Mandy is shouting 1. Okay, so that means everyone is good. All right, so I'm moving on. Okay, thanks, Stephanie. So, all right, examples again for candlesticks, right? I was saying at different time frames. So I will give you an example here. Here is Tesla, one of most people's favorite stocks. So Tesla, this is a 4 hours chart, which means simply is this: each candle represents the movement for 4 hours. And this will be, let's pay attention to the most recent candle, all right? So for this candle itself, the last 4 hours, right, Tesla was up by 1.57%. So let's take a look at a different time frame. Remember these two candles, huh? And yeah, when you look at 1 day candle, this is actually the latest candle for Tesla. Why is this so? Is solely because that these two green candles actually add up, all right? So why 4 hours plus 4 hours equal 1 day? Very simply is this, guys. If you are in Singapore like me, right, what time does the market open now? 10:30, right? And what time does the market close? Exactly 8 hours after 10:30. So it means that actually when you add two candles of 4 hours together, right, 8 hours equals to candle of 1 trading day. Okay, so let's look at a comparison or side to side for easier for everyone to digest and to understand and to load into their mind. Okay, so when you see the two boxes here, a big fat red candle, short green candle here, when you add it up, you have a shorter red candle body and a longer tail here. Yeah, this is basically how candles add up. Okay, another example, two green candles here add up. This is a resulting. And also these two green candles, when you add it up, it will be a longer green candle body with a shorter tail here. All right, so this is Tesla. And yeah, it's very important to know the relationship on how candlestick works. Okay, this will be the second topic. Let me just admit some people in, all right? Give me a minute. Okay. All right, Shuki and Hanyang is in. All right. For those who you just joined in, right? I have just finished talking about candlesticks. Don't worry, I'll have a very quick recap at the very end. But if you want, you can watch back the recording, right? Right now, I'm just going to continue on my second topic for technical analysis, which is support and resistance. So first, you know how to look at the candles. You understand how the buyers and sellers are battling themselves to show you this candlestick already. So next thing you want to do is you want to know what is a good floor or what is a good ceiling for you to buy and sell. Okay, so in in technical or financial jargon, we call this support and resistance. Support basically is a, is a safety net. When the price fall to this level, right, it has a very high potential it will rebound. And resistance is simply the opposite. It's the ceiling of the potential retracement. And the analogy is this, people. When you stand up, right? Okay, when you stand up now and you are trying to jump, okay, you are trying to jump as high as possible. So how high can you jump? Okay, how much can you jump up? What is the limiting? What is the thing that limits how high you can jump? It's probably the ceiling of this floor, all right? So you jump up, you jump from the floor, and the highest you can jump until will be your ceiling, all right? So once you jump through the ceiling, right, you imagine yourself, you are now on a second level. So second level, the ceiling just now is now your floor, okay? It's simply this. So when you jump again, the next thing that is stopping you will be the other ceiling, all right? So why am I talking about this example is basically, I want to introduce you another aspect of support and resistance, all right? So support is the floor for potential rebound. Ceiling, resistance is a ceiling for potential retrace, means price goes down, okay? But when a resistance level is broke already, so when you jump up, you jump above your ceiling, the ceiling is now your floor, okay? So resistance will become your new support level. And vice versa, if you jump down, right, your support level, if you break your support level floor already, it becomes your most newest, latest resistance, all right? So when you break a support, it becomes resistance. You break a resistance, it becomes support. So why is this important in technical analysis? Is because if you know your support line, you know it's a very potential point that your price will rebound up. Okay, so it's a very good entry for you to buy or for you to enter your position. And when you know where is the next resistance, right, you will know that once the price shoot up to that point, right, it has a very high possibility that the stock price will just come down back again. Okay, so that will probably be one of your good price to sell or to exit your position if you want to. All right, so support and resistance, very important is this: when can you enter a support, when can you exit at your resistance. So now I'm going to give you some examples. I'm taking this example again from TradingView. If you just come in, please use TradingView as your website of today, all right? I will be doing a lot of charting on TradingView, and the example I'm giving here will be Visa, okay? Visa is one of the stocks that I love a lot, but it hasn't been moving a lot, okay? So from here, green, support. Green will be your support line. Red is your resistance line, which is the ceiling, okay? So from here, you can see, right, Visa, this is from June to August. June to August, Visa hasn't been really moving a lot, okay? It has just been touching the ceiling. Oh, it decides to come back down again and reach your support. It goes up again, all right? It's just keep on jumping from the floor to ceiling, floor to ceiling, floor to ceiling, floor to ceiling, floor to ceiling again, okay? This is Visa from May to August. So if you invest Visa from here, right, and until maybe the early August, you don't see your portfolio grow much. It's because that stock has been going up and down, up and down. And I explained the second aspect just now. When one of the resistance is broken, right, it will now be your new support level. And we are seeing this in Visa also. So from mid-August onwards, you can see that the price break quickly above this red line, okay? So this red line, which used to be your resistance level, now is your new support level, all right? So you ascend from level 1 to level 2 already. So where is your ceiling of level 2? This will be this black line which I draw here. You can draw slightly higher. It's actually your ceiling for your next resistance. And we can see here the price is supporting at the previous resistance level, all right? So this is your new support level. Again, it hits again here. Here is a slightly smaller resistance level. It breaks through and somehow it supports here again, okay? You can see that the price consolidates here. It jumps back up, but it didn't overcome the previous resistance level and it falls back down, okay? So this is basically a very brief example on how you draw horizontal line to know what is a good support level, what is a good resistance level, okay? All right, before I move on to trend line, any questions on support and resistance? I'll take this opportunity to drink some water. If no question, type in 5. Type in 5. Let me check anyone that needs to come in. Wow, thanks, Han Yang. A lot of 5. Okay, keep the energy up, people. And with that, I will begin. Okay, there's a question here for Mandy. Does support and resistance work in a short term? All right, this is a very good question. All right, and I want to answer this question first now. So support and resistance, right? How strong is a support level? How strong is a resistance level? To me, if the candles, the more the candles touches at that level, right, is a significant price level. So for example, Visa, right? When you look at Visa, when you look at Visa, this red line here is actually a very significant level, be it support or resistance. Cost price, whenever the candles comes here, right, it will always either go down or it will go up. Okay, so this is a significant support level for Visa, support or resistance level for Visa. And does it work in a short term or long term, right? It really depends on what is the support line that you are drawing from. Let's say, for example, if you draw a support line all the way from 2018 until now, and you see that a lot of candles actually hit that price and either rebound or retrace, right? That is a long-term support. But for example, Visa, I'm drawing here this new resistance on a very short line here, right? This will be a very short-term support or resistance because it only starts to come down from this level, all right? When you draw a recent price level, it will be a short-term support or resistance. But if you draw it a very long time ago, say 2018, and you see that every time the price touches that level, it comes down or goes up, right? It means it's a long-term support or resistance. Okay, is that clear, Mandy? Okay, good. And I shall continue on the next topic. All right, don't worry, we'll have some time later to answer more Q&A and some more practical and discussion, okay? Thirdly, trend line. Trend line is, I will say, the most simplest topic in technical analysis, all right? Uptrend, when you see a price going up like this, right, it means that price is moving higher. So it's a bullish case for the particular company or the particular stock. Sideways, like Visa for that moment, price move within a range, okay? So it means that it goes up to resistance, it comes back down, it goes up again, it comes down again, okay? So not much movement, is traveling within a channel or within a range, okay? So price is not going up a lot, but it's not going down a lot. Downtrend, downtrend is exactly the opposite of uptrend, all right? So it's a bearish case, price move down on a long period of time. And you know that if you invest something on a downtrend, your money is going to lose, all right? So very importantly, trend is your friend, okay? Always find the company that has a good growth in a long-term perspective that is always uptrend. So whatever you invest in, right, it will be in uptrend for the future, for the time being that you invest your money in. Okay, quick example. This is a company I love a lot, SE Limited, C. Your Shopee is under C, all right? It's a Singapore-based company, and from COVID onwards, actually from March onwards, 2020, the stock just go up 45 degrees, okay? So it's a very, very bullish stock. It just tells you that this is a very bullish, very strong growth stock on SE, all right? This is an uptrend stock. And you always want to invest in stock like this, which has a potential growth. On the other side, this is another example. AMC is a cinema or entertainment holdings in America, all right? So from 2017 onwards, you can see that the price is moving on a downtrend, okay? This is a downtrend. You can see every time the price moves down and it touches this level, it goes down again. So this is a diagonal resistance for the AMC, all right? So this is a downtrend stock. And sideways stock, for another example, this is Johnson & Johnson. Also, I invested in Johnson & Johnson. Price just doesn't move a lot, all right? You can see from May to now, until now, in fact, it's not going anywhere. Go up, come down, go up, come down, go up. Okay, so this is an example of a sideways stock. The price is not going up a lot. Your capital is not growing a lot, but the price is also not dropping a lot. All right, so a bit hard for you to do a lot of stuff with this kind of stock.